Welcome to Dollars and Cents, hosted by Sanjeev Gupta, CPA. Dollars and Cents is the show about growing more of what you are making, saving more of what you are growing, and making more of what you are growing and saving in the most sensible and tax-efficient manner possible. Feel free to call into our studio number to be live on air with your questions. Call 408-912-5038. That's 408-912-5038. And here is your host of Dollars and Cents, Sanjeev Gupta, CPA.
Good evening, friends. This is your own CPA, Sanjeev Gupta, CPA. As the name of the show indicates, is dollar and cents. It means not only saving money from different sources like taxes. Of course, tax is a big element which takes out money from your pocket. And if you don't plan it, of course, you pay taxes in different forms. It can be income tax, it can be sales tax, gasoline tax, you name it. There's so many taxes. If you start adding up all those taxes, you'll find out about 60 to 65% of your earnings goes into taxes. So not only saving the money from those taxes, but also becoming compliant with respect to different regulations so that you don't end up paying penalties and interest, which is just a waste of money. You don't want to throw money for those things. So you have to make sure that you are compliant with respect to deadlines, with respect to filing requirements, with respect to things received from the tax agency. It can be from IRS, it can be FTB, it can be EDD, it can be sales tax board of agencies, or it can be any other state agency which affects your bottom line, and they go and send you notices, and you really have to look into those notices. Just don't keep those notices under wrapper and don't open it. And you forget to open it, and then end up paying more because the meters is running and they can penalize you big time. This is Sanjeev Gupta, CPA, giving this show Dollars and Cents every Wednesday at 6:30, sorry, 9:30, not 9:30 a.m., 6:30 p.m. to 7 p.m. Every Wednesday. This is the time you get to talk with a CPA on air with your questions. If you have listeners, if you have questions, this is the time to connect with me on air. The studio lines are open, 408-912-5038. The studio line number is 408-912-5038. So like I said, talking about compliance is an important area where you save most dollars in the most sensible manner. One of the topic that comes up is the notices that you received. And that will be our dollar topic of the show. The notices, millions of Americans are finding out that IRS is sending a math error notification, mathematical errors notification. And they have sent more than 5 times than what they have sent in 2019. So 5 times. And they are sending it more, going to be more, maybe it's equal to 10 times the notices. This adjustment generally demand more money, or they are going to reduce your refunds. And if you owe money, they give you only a few weeks to pay it. Without facing penalties and interest charges. And if you're one of those sizable number of Americans who received this letter or going to receive this letter, by the way, you probably have a few questions. And do you know, if you want to try and get the answers to those from IRS, don't even try it. So what's going on? Is the question that comes up with this is this matter an audit? A lot of clients come to us and say, I received a note, I'm having an audit. It's not an audit. The math error letter is not an audit. What the letter is doing is IRS is asking you to review or examine your financial information for your filing. It is saying that the calculation you made when paying your taxes were either incorrect, or generally you owe more than you paid, or due a smaller refund due to some errors in estimating tax payments or making those payments wrong. If there may be a number of reasons for this. It may be that you received this notice because you not reported correctly Social Security number. or the name of the dependents claimed are not matching the IRS records. And the best bet this year, though, is you're getting this letter because of the economic stimulus payment. There were two stimulus payments, stimulus payment number 1, stimulus payment number 2. I remember the gross adjusted income was mostly around 150,000 married filing joint, and single was $75,000. So that also is creating a lot of problems. It's creating the problem with economic stimulus payment, creating the problem with unemployment compensation calculation. Remember, up to $10,200, unemployment compensation was not subject to taxes. Now that created different calculations. People who disagree with those notices, they are encouraged. Why in the notice says call the IRS at 800 number, and you know what happens when you call the IRS. And they generally give a 60-day to request an abatement for the amount owed if you owe that money. And in that time, if you can provide additional documentation to the IRS to explain why you should not have to pay, then provide those documentation. But it's not difficult. It's not easy to connect with the IRS. So the best thing will be to connect, to do a mailing response. And what happens with the mailing response? Truckloads of responses, letters are lying with the IRS. They are way behind in processing those notices, those things. But you should have a copy, or you should have a receipt of the mailing of those notices with the response. Then you're okay. Then you're done. What happens if the letter does not mention a 60-day time period? Are you eligible for that one? Well, over 5 million letters went out this year without language about the 60-day time period. This was an error. And IRS is resending those MAT error notices with proper language. So when you receive a notice, just don't go paranoid, and just start calling your CPA or just sweating it out and saying, oh, I'm in audit, I don't know what to do. Just hold on, connect with your CPA, make them understand try to get the understanding from the CPA, what is this notice about and how to resolve this. If the CPA does not answer those questions, then the CPA are not the best person. That CPA needs to be changed as ASAP. Is this going to be a one-time thing? Well, stimulus payment were a part of 2021, so don't be surprised if you see another note from IRS next year. In addition, the child tax credit could further complicate more things that might come up, and is creating more and more confusion with respect to the processing of the returns and advance payment of those credits with respect to what is going to happen with 2021. So folks, be ready for those notices and confusion that can come because of notices, because of the communication issues with IRS. But don't worry, we are there for you. My firm, Sanjeev Gupta CPA, has offices in Fremont, Sunnyvale, and Pleasanton. And we have a team of experienced CPAs, CAs, and EAs, and accounting professionals who are well-versed not only on US tax rules and regulations, but also with Indian tax rules and regulations. My staff, my people speak multi-languages and are available year-round, not just during the tax season. Myself, not only a CPA, but also experienced chartered accountant. I've been practicing in India for 12 plus years, and we are well versed with international tax rules and regulations. My webinar coming up on October 9th is on foreign income reporting requirements and foreign asset reporting requirements, which is well known by the name FBARs, FedCom Form 8938, and all the mutual funds. People, if you have all those mutual funds, foreign mutual funds, which people have those things, because when you go to India, these people, the mutual fund, the bankers, the financial institutions who owns those mutual funds, who get commission from the mutual fund, are after your life to invest that in those funds, because they show you the world. Whether there's a real world, we don't know. So if you have those foreign assets, foreign income, and how to become compliant, very important topic. We have been talking about this for the last several years. A lot of people have become compliant. A lot of have achieved knowledge on this. But if you're one of those person who needs more information, more clarity, remember our webinar is happening on October 9th. And the way to register for the webinar, go to my website, sanjeevcpa.com. That is SANJIVCPA.com. And you can register for this upcoming webinar, which is on foreign income reporting and foreign assets reporting requirements. As of now, if you have any question, listeners, tax question in your mind, whether it's relating to real estate, whether it's relating to stock options, stock sales, capital gains, cryptocurrencies, by the way. A lot of people, you know what happened today? El Salvador accepted cryptocurrency as a currency for the country. Whether it makes sense, I don't know. But that's the topic for the discussion. So cryptocurrencies or business owners, if you are having PPP loan and ERCs and questions on those one, definitely this is a time to connect with me on air. This is Sanjeev Gupta CPA on air, and the studio lines are open. Studio number is 408-912-5038. 408-912-5038 is the studio lines. If you want me to discuss a particular topic during my show and want more information, definitely you can email me at sanjeev@sanjeevcpa.com. Always email, because we get emails and we definitely want to take up those topics and share that topic with information with all of you for your advantage. Like I shared just now about the math errors letters, which people are receiving in lots, and they don't know how to respond to those questions, to those letters. Now you know how to respond and don't get fearful in answering those letters. 408-912-5038 is the studio lines. These are open. Listeners, if you have questions, tax questions, call me in. Now let's go to our dollar topic of the show. Dollar topic of the show is about the deadline, which is happening on September 15th, 2021. On the deadline is for S corporations and LLC. We have a caller here. Let me take this call. Good evening, this is Sanjeev Gupta CPA.
Yes, hi. My name is Bhavesh. I have a quick question. I have a W-2 income, which is around both of us 300K, and I'm in a 35% tax bracket, and I cannot, and my mortgage is not below standard deduction. And so, is there any way we can reduce taxes?
Well, this is a very broad topic to be discussed on air, but definitely general points is you have ways to reduce your taxes. When we talk about reducing taxes, it's not reducing taxes in the short term, but over long term. So you have techniques, you have ways to look at it from real estate, from a business point of view, from different ways that you can save taxes. Definitely it's a wholesome practice. But the one thing I can tell you right now, just for your benefit and the benefit of the listeners, if your mortgage deduction is lower than the standard deduction, try to increase it more than the standard deduction. And the way to look at it, maybe you can refinance the home, get more equity out, and buy more properties. Okay, that's a discussion for the time, but definitely one way is to look at that. Okay.
Okay.
Thank you.
Any other way? Any other options?
Well, like I said, it's a very broad topic. We can look at the business, you can look at the other options, but if you want more one-on-one basis, we can connect via you can call my office number 510-825-7563. Okay, we can set up that.
All right, thank you.
Thank you. Really appreciate that one. We have a lot of calls here. Let me take this call. Good evening, this is Sanjeev Gupta CPA. Hello, good evening, this is Sanjeev Gupta CPA. I think we dropped one call. We have another caller here. Good evening, this is Sanjeev Gupta CPA.
Yeah, I had a question. If I buy a property with my daughter, and it will be a second home for me, but a primary home for her, and I help her with the down payment. But the title, both of our names would be there, but the loan she would take on her name only, and she would pay the interest in the mortgage and the property taxes. So is there any possibility that even I can have some tax implications, or I can just help her with the down payment and it will be fine and I won't have any tax implications?
That's a very good question, by the way.
Yeah,
very good question, by the way. So if you're looking to make a down payment for your kid, it can be a daughter, it can be son. If you're making a down payment and you're just making down payment so that kid can buy a home in their names, and of course you can be on a title, but it will depend upon who is on the loan. If the loan is in your name or you're guaranteeing the loan, definitely your responsibility for making loan payment. But if the kid take the responsibility of making loan payment from their earned income, and definitely they become a beneficial, they have a beneficial interest in that payment. And if they continue making those payment from their account, and you don't help them in making the payment, and they continue making this payment, they can deduct those mortgage interest on their tax return. Don't deduct on your tax returns, even if the loan is in joint name, because the IRS can send notices. But don't worry, if you can say that the payment is going through their account, he's responsible for making the payment, then definitely that will be answered. But there will be no liability on your account. But make sure if you're giving a gift of the money to her, if you own joint ownership, if you want to joint tenancy, or then definitely different issues may come in. But there will be no tax implication as such for you, which if you're giving a down payment and including on the title as the owner of the property. Otherwise, it would be treated as a gift, and then things might change later. Okay, so listeners, if you have any other question, you can call in. The studio lines are open. 408-912-5038. 408-912-5038 is a studio line. This is Sanjeev Gupta CPA giving the show on Dollars and Cents every Wednesday from 6:30 p.m. to 7 p.m. It's the time for interacting with the CPA on air. So any questions are welcome. Let's go to our dollar topic of the show. We are talking about September 15 deadline for S Corporation LLCs. Last time we talked about dissolution of the companies. Today I'm going to talk about the pass to entity tax, which is a way of getting around the estimated tax, getting around the SALT limitation of $10,000 for S Corporation LLCs. So the California has come out with a plan where they can you can pay through the voucher, voucher or online payment. They have not yet designed that form yet, so you can make those payments, which you can estimate on your personal taxes. For California, of course, we are talking about California, not federal. So if you estimate your California tax you owe on the income that you're going to make this year, you can make the payment as part of at the corporate level, and you can take deduction because you remember on the federal tax return, the state tax is allowed as a deduction. So you can take the deduction and you will get a credit on your personal taxes on a California personal tax return. So it's a good way of doing it. But like I said, Franchise Tax Board is still working on it. We don't know what details and what the voucher and what things will come out. Just keep listening to my show. You'll get all the details about that one. What about estimated tax payment that is coming up on September 15 for business owners for third and fourth quarter? When you have this pass to entity tax, what happens? Do you want to pay the full amount or do you want to pay the reduced amount based on this one? Well, I will suggest them to pay the full amount, ignoring this pass to entity tax. Remember, President Biden plan is also looking at kind of going around this mortgage interest reductions and state tax reductions, because they're looking at the itemized deduction as a wholesome, like limiting it to 27% or 33% for people making a lot of money, about 400K. But again, a lot of things are there in his plan. I will hold on that discussion today, but as things becomes more clear, we can talk about that when things are available easily to us, and I can explain to all of you that time. 408-912-5038 is the studio line. It's a studio number. It's a time to connect with me, CPA on air, Sanjeev Gupta CPA. I'm doing the show Dollars and Cents every Wednesday from 6:30 p.m. to 7 p.m. Now coming to the deadline of September 15 for S Corp and LLCs, important area for planning for those people, last minute planning, you can look at your SEP IRA contribution. Remember, SEP IRA contribution can still be done by the S Corp owners and LLC members even after April 15 deadline, March 15 deadline, but if they need to file extension, so they can still contribute to that plan. We have a caller. Let me take this call. Good evening, this is Sanjeev Gupta, CPA.
Hi, this is again, like I was speaking about the daughter, and just a continuation of the earlier question. Like, of course, she would be responsible for her loan and the property taxes, and she would be paying. But since I would be helping with the down payment, and you mentioned about the gift tax, but that is just a lifetime because you should not give more than some $1 billion to the kid, which we don't have, and I don't think we'll ever give. So it is, we don't have to pay any taxes for it. It is just for a record because of we'll be crossing that 15,000 per year or something like that, or how does it work?
Yes. So there's a two limitation. There's annual limit and a lifetime limit. So annual limit is $15,000, more than $15,000 per person. If you give it more than $15,000, you have to file a gift tax return, 709 return. That is taking out the extra amount above 15,000 from the lifetime limit of $11 million indexed to inflation. So that will be you don't end up paying taxes on that one. You're just taking out the extra amount. By the way, we always think we will not cross that $11 million, but think about a house in California can be about 2 million to 3 million or more. One house. And what about life insurance policy? What about other assets? So if you count all those things, it's not difficult to reach that limit. By the way, President Biden is looking to lower that gift rules as well. So it's as of now, you just have to file a gift tax return if it's more than $15,000, and that's it. You don't have to pay any taxes.
And even if the property is on my name and her name together, still we have to file the gift tax return, or
no?
Because the title is going to be on both people's name, but the loan is going to be on her name.
The loan will be on her name. Then it's just a joint ownership. You're giving up. You're not giving up your share. Your right is there as a owner of the property. You don't have to file that one. Okay.
You don't have to file the gift tax then, no?
No, you don't have to because you're owning that property as well.
Okay. Yeah, that is what I wanted to know. Yeah. All right. Thank you so much, Sanjeev Gupta ji. You have answered with a major question which I wanted you to. Thank you so much.
Thank you. Really appreciate your call. Listeners, this is the last 4 minutes of my show. Is there time to connect with me on air? 408-912-5038 is your student line. 408-912-5038. Now, coming to the SEP IRA contribution for S Corp shareholders and LLC members, yes, you can do that. S Corporation, as for SEP IRA contributions, is based on your payroll. You can do up to 25% of the payroll. Remember that till September 15 deadline. And if you're LLC members, you can contribute up to 25% of the net profit. Don't have to run payroll for the LLC unless you are a manager, designated manager for the LLC. So 25% of the profit earned from the LLC, you can do that. But remember, if you have employees in that, eligible employees in that S Corporation and LLCs, the SEP IRA rules are a little complex. You have to look at the eligibility requirements for each employee. Generally, if any employee is more than 3 years as of December 31st working with you continuously, then definitely you have to provide that benefit to them as well. You cannot do it for yourself, but you have to look into the total scenario, whether you're qualified for that contribution. If you're a single person, or if you're married filing joint return and your wife is also included, your kids also included, you can also do that contribution. So that's a very important contribution. Is a very important deduction, which a lot of people avoid it. A lot of people miss it because they do the returns at the last moment. We are coming to close of the show. Just want to thank all of you to listening to my show. Just want to make sure that you understand we are still in COVID scenarios. COVID is going up and more. The cases are climbing up and up. Remember, try to curtail your travel. Try to be more inside. Cover your faces. Have a face mask always, and sanitize your hands. Those old rules are very important. Keep that and keep a safe distance. If you maintain those precautions, your kid or your family members or neighbors or your friends will not be affected by it. With that, thank you. Thank you for listening to my show. I will meet you next Wednesday, same time, 6:30 p.m. to 7 p.m. Dollar and Cents Show. Thank you.
Thank you for tuning in today to Dollars and Cents, hosted by Sanjeev Gupta, CPA. Tune in next Wednesday and every Wednesday at 6:30 p.m. If you have any questions about the program or its related topics, you can get in touch directly with Sanjeev Gupta, CPA by calling 510